Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 23rd of April 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and the price moves to be aware of. As it's the first video of the week, we'll look at things from a weekly perspective, of course. First thing I want to flag is that the British pound trading against the US dollar is back below 130, trading with a 129.88 handle, down by 0.47% against the US currency over the last 7 days. There were also losses over that period for both the Australian and New Zealand dollars. The Aussie down by 0.71% against its US rival. The Kiwi very much on the back foot. The New Zealand dollar down by 1.32% over the last 7 days. The dollar is also gaining against safe haven currencies, taking 0.82% off of the Swiss franc. That's one to watch because, of course, as the dollar appreciates against safe havens, it suggests that there is a risk-on attitude on the part of investors. Dollar index for its part up by around 0.30% over the last 7 days, so back on the front foot once more, the trade-weighted US dollar. And we can see the effect of that on the South African rand, which has given back 0.97% against the US currency over the last week. So really, it's a story of a somewhat resurgent dollar and pretty much everything else pulling back in the face of the improving greenback. Okay then, what's on the calendar? Events that may move the markets today. A pretty gentle calendar, to be fair. We've already had credit card spending data out of New Zealand for the month of March, slightly lower than anticipated there, and well below in fact the previous read. And to come today we have to wait till 12:30 GMT for our first significant announcement, and that is wholesale sales data for the month of February out of Canada. That's followed at 12:55 by the US Red Book, a look at chain store sales across the USA for the week of April 19th. At 1300 we stay in the States for housing price index data for February and new home sales data an hour later at 1400 GMT for the month of March. At the same time at 1400 GMT we'll also get the Richmond Fed Manufacturing Index, a chance to see how US manufacturing industry is performing in the state of Virginia. These regional Fed indices of course help to build the bigger picture of the performance of the wider US economy. And then we'll also have at 1400 an opportunity to take a look at the performance of European consumer confidence for the month of April. So a look into the thinking of European consumers, how they see the economy where they live and the outlook therein. At 1530 we'll have a 52-week bill auction out of the USA, and then a pause till 2030 when we have the weekly API crude oil stocks data for April 19th. And then finally at 2350 this evening we'll have Japanese corporate service prices data for the month of March. Okay then, breaking news and comment that's caught my eye overnight and over the weekend. First of all then, oil prices have hit new 2019 highs as the US decides not to renew Iranian export waivers. You may recall that the US had allowed certain countries to continue to import oil from Iran in sort of opposition to the sanctions that the US has placed on Iranian exports. However, those are now ending, and of course that means tighter supply and higher oil prices. Meanwhile, the debate heats up in Spain ahead of elections on Sunday. The four main party leaders went head to head last night in an intense TV debate. The Socialists, led by Pedro Sanchez, have a lead in the polls with around 31.5% of the votes. However, that won't be enough to form a majority government, that they should probably eclipse the coalition of right-wing parties that are their main opposition. Meanwhile, staying with politics, Brexit returns to the UK agenda today as Parliament reopens after the Easter recess. Amid calls for Theresa May's resignation, the Prime Minister will try and continue her dialogue with Jeremy Corbyn to try and find a way forward. But the question now is, will she be in the job long enough to see this process through? Okay then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? Over the weekend, Beijing has warned that housing markets should not be used as a speculative tool. However, by some estimates, there are at least 50 million unoccupied properties in China, and so that warning may have come far too late for the market. And as we can see here on the right, this is a chart of Chinese property stocks in the CSI 300 real estate index, and they've sold off sharply over the last few days as that news has broken through. Not yet busting below the long-term trend line dating back to December 2018, but certainly under pressure. And of course the housing market has been one of the major sources of concern for markets about levels of debt and speculative bubbles in China for the wider world markets. So it'll be interesting to see what fallout from this is, or what the further fallout from this is, if any. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, who'll be happy to take you through those. And do take the time, as I say, please, to read this risk warning thoroughly. Thank you for your time today.